Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate. We've got longtime fools Jason Hall, Tyler Crow, giving a 1 to 10 rating to the company that invented hydrogen, oxygen, and nitrogen. Okay, they didn't do that, but they produced those gases and others for industrial uses. It's Linde, ticker symbol LIN. First, we'll talk about the business, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Tyler and Jason have both given Linde a 9, and we'll start with Jason.
Yeah, this is one of the greatest business models in history. This is like the Apple of industrial gas. They may not have invented those gases in the same way that Apple didn't invent the smartphone, but they've figured out how to make more money out of it than anybody else. But the business model is perfect. Your flagship customers guarantee you're going to make some money, and then you get to sell the excess production in a geographical area that you monopolize at a really nice markup. The tailwinds, they're actually really good too. This is not an industry in decline. There's a lot to like about this business.
Yeah, just to kind of play on that, customers like the guarantee returns. Basically, you co-locate with like an oil refinery or a steel foundry or something like that, and you pipe to them, and they basically sign 10 to 20 year take or pay contracts, which basically means a guaranteed return. Like they're going to pay you regardless if they use it or not. It's a great way to kind of underwrite your business, and then you basically get to take whatever you don't sell to the primary producer or primary customer, you get to do it at food and beverage, medical, and anyone else that needs oxygen, hydrogen, CO2, and the numerous other industrial and kind of food, beverage gases that we use in our everyday lives.
That is pretty good. The Apple of industrials. I like that, Jason. Management. A 10 is Warren Buffett. A 1 is Homer Simpson. Both of you agree again and give a high score of 8. Tyler, why so high?
Well, I kind of thought that like the leadership's like a system quarterback in football, because Linde's one of those businesses where management doesn't need to do anything spectacular. They just have to run the playbook. And the playbook here has been how to, it's worked on how to both grow a business organically and through bolt-on acquisitions. The current CEO, Sanjeev Lambda, started at a competitor, BOC, in 1989, but Linde acquired it in 2006. So he's been with the company for more than 30 years now, or at least some iteration of the company. And what I like more than anything else, and I'm really big on management incentives, is that it has a compensation package for its management team that it incentivizes growth, bottom line earnings that doesn't get all those voodoo magic adjustments that a lot of other companies like to use, and then a guardrail of return on capital, which says you have to be really efficient at what you do.
Yeah, I mean, Tyler's right here. I don't want to give management too much credit for picking the perfect business to run, but the history here and the total management score of that 8 for me goes beyond just the CEO. Steve Angel is currently he's the chairman. Modern Linde exists from a 2018 merger with Praxair. Angel ran Praxair starting in 2007, ran it and through the merger until 2022. Now he's still the chairman, and I think giving that the quality of this business in an industry full of quality businesses, if there's any one individual that should get a lot of credit for that, it's him. Such a well-run business. They have great culture. They have great incentives, like Tyler said.
Brock Purdy problem of rating management, but they give an 8, which I think is fair. Financials. A 10 is a fortress. A 1 is yikes. Both of you agree again. Tyler and Jason, you both gave an 8. Tyler, why?
Well, for a $260 billion business, $5 billion in cash seems kind of low compared to relatively high total liabilities, about 41 billion, but its earnings and cash flow are so consistent over time that I wouldn't be too worried about any kind of discrepancies on the balance sheet. Again, lots of goodwill and intangibles relative to the long-term assets, but some of those assets have been there for so long that they're depreciated down to practically nothing. And so a lot of this is really by design as it rolls up smaller players, because when you buy people, you're going to have by design a lot of goodwill and intangibles.
Yeah, most of that goodwill is tied to the Praxair merger, and that's been a success. You look from that merger prior to it, free cash flow per share is way up. Gross margin, operating margins are much higher, creating a ton of value for shareholders. And if you applied David Gardner's SNAP test to this, snap your fingers, talking about how important a business is, its customers couldn't function if this business went away. And that certainly salves any concerns I have about the amount of cash on the balance sheet, like Tyler was talking about.
You try functioning without oxygen. Let's move on to valuation. Jason, how well will Linde's stock do over the next 5 years? And how safe is it? 10 is a sure thing. 1 is a lottery ticket.
So I think the lower end of that 10 to 15% range is likely. Safety score of 8. This is one of the really high floor, maybe lower ceiling businesses. My biggest concern, same as what Tyler's going to hit on, it's valuation. We've seen a lot of multiple expansion over the past 6 or 7 years. We're eventually going to see some reversion to longer term averages. And I think that makes it harder to be an outperforming stock, but it is so high quality that I think the chances of losing money for long-term investors is really, really low.
Yeah, I said 10 to 15% with a safety score of 8 as well. The 20-year returns are about 14% annualized, and earnings and cash flow have been so consistent. It's hard to see that being disrupted too much. I think the greatest risk is a reversal of the multiple expansion. It went from 18 times earnings in 2016 to about 34 times earnings today. If the market were to change its mind over a 5-year period that we're talking about here, which is very realistic, it might not quite get to that 10% annualized return, but even a 9% return over a return of compressing multiples is a pretty good return.
Let's move on to top it. Jason, is there a company in Linde's space you like more?
Not really, and I don't want to go through too many mental gymnastics to find a company that's maybe looks similar. It's better than its competitors. It simply has. The valuation is stretched. I think it's a perfect watch list stock, and there's nobody better in its industry that I would suggest instead.
Same thing. I don't see any reason why it would actually underperform Air Liquide or Air Products. Linde has been outperforming him for years. I don't see any change in that.
Thanks to both Jason and Tyler. Jason says Linde's a perfect watch list stock, but he and Tyler are making me buy it because they've given a score of 8.1 out of 10. But I'm happy to get it in my portfolio, maybe buy more at lower prices eventually. It'll be a great diversifier to my portfolio. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Mercado Libre. Till then, Fool on.
Hey, Anand.
Yes, Jason.
So you know what you'll have if that stock goes up 200% in the next 5 years?
What will I have, Jason?
A triple Linde.
Oh, no respect.
Wah, wah, wah.